Today we'll be taking a look at the stocks in my portfolio, and I'll be sharing what I'd like to be doing next with them. In this video, I'll be going through all of the major positions that I have in my stock portfolio and whether or not I basically want to buy, hold, or sell each one of the stocks that I have. Some of these are trades, some of these are longer term holds, but let's go ahead and jump right into it. So the first one is Tesla, and we're starting with a banger here because Tesla has been a really strong performer in my account over the years. I've traded in and out of this name many different times and done really well with it over the long term. Now, of course, recently has come back into scrutiny with the Trump and Elon Musk fallout. I did a video about that on my channel. I highly recommend you check that one out after this one if you have not already. But let's talk a little bit about the stock. Why do I like it for the long term, and why have I traded it so bullishly over the years? Well, the big reason for that is because I think that this is a tech company. A lot of people, criticize Tesla for being a car company that is way overvalued, and the PE ratios are insane. And it is hard to say otherwise in terms of their valuation being very high. But I think that they're priced so high because they are on the forefront of the EV trade, the EV kind of race, and also the self-driving and robo-taxi stuff looks very potentially like a game changer in the future of transportation. So they're positioned to potentially be the leader and the winner in all that, but it is very speculative. And when we take a quick look, just for example, at Tesla in terms of the the positioning here, it's kind of a difficult one if we're looking hindsight or looking in the rear view mirror. You can see their profit margins have really come down here recently. Their net income has really dried up in terms of where it was. We had some very strong growth and numbers, but the PE ratio has gone sky high here recently due to the fact that earnings have been kind of not super impressive. The revenue growth has not been super impressive, and so the stock price has gone up quite a bit over the years, and yet the earnings don't quite seem to justify the price. That is, of course, because we are very much in this stock looking at the future. We're saying, hey, what's the next kind of big thing for Tesla? Well, it's robo-taxis and stuff like that. So I do want to maintain a position in Tesla, but here is my final kind of verdict on Tesla. I have a really big size position, and it is honestly probably too big for my account. So I am looking to not necessarily close out entirely of Tesla, but to partially close out some of this position. The way I plan to do that is by writing or selling calls against my existing position. So I do want to short some calls. However, I would wait for the stock to potentially kind of reach more of a overbought status before I do that. So if I just increase this, now here is some real hindsight for you. I really should have, could have, would have sold some calls when this stock had made such a big move here. I inappropriately did not do that when I definitely should have. What I mean by that is I could write calls against the full position, the 400 shares that I have. That would be 4 covered calls that I could sell, right? I could do that. But what I think I might do is I might do a little bit more of a half of the share. So I could do 2 calls and short 2 calls above the previous high or something like that. But the basic idea is I do plan to hold a portion of this position, but I do need to downsize the risk into the portfolio due to this very large size position that I have in one singular stock. Let's move on to our next one. So I do really like Tesla for the long term. I think that it is a highly speculative play. So that being said, with it being a speculative play, I think it is worthwhile to keep in my portfolio. I believe in the ideas. I believe in the long-term potential in this company. But I think a speculative investment should not be such a big size in my position or in my portfolio. So I do plan to downsize Tesla, not sell out completely, but sell some covered calls and see if the market takes them away from me. Or takes the position away from me through getting assigned on those. Or not assigned, but called away from my position. So next up, we'll take a look. So this IWM, this is an active trade. This is a position that I'm just trailing stops on. So this is an active kind of short-term swing trade that I'm currently in. I do plan on the market open. We had a really nice break through these highs. I do plan on taking this 4-hour chart and trailing my stop loss right up into here. So I can actually go ahead and just do that even though the market's closed at the time of recording this. So I do plan on closing this position if it can come back and fail underneath here. So I like the idea of staying in this trade as long as we continue to push higher, which I think markets can push higher, but I'm just going to stay on the sidelines for this one and just wait to see if it wants to either keep pushing, put in some higher lows, and then trail that position. So that's an active trade for me. It's an ETF, so not quite a individual stock. Anyways, up next is Hood. So we had some interesting news on Robinhood. This is one of my favorite stocks, and it actually had some interesting news that happened on Friday afternoon. So for those of you guys who watch Robinhood, Hood had some interesting news about the S&P 500 not adding HOOD or Robinhood to the list of stocks. There was some speculation that Robinhood might be getting added to the S&P 500, so the stock really traded up on pre kind of announcement. And then on the announcement, we actually got the news that Robinhood is not getting added to the S&P 500, and the stock closed lower in the after-hour session. So if we take an hourly chart view, what you can see with the stock is that once that news announced, we had a pretty precipitous drop from this intraday or intra-after-hours spike high. We saw a 13% from peak to trough drop. That's a pretty sizable drop. But this actually in some ways is a good thing for my current positioning in the stock. So I have a good bit of share in Robinhood. And again, you can see it is a much smaller size than Tesla. So this is also kind of a speculative position because Robinhood is also an expensive stock in terms of their valuations. But I have calls that I sold on Robinhood at $75 per share. I sold this a month ago or a little less than a month ago. So it's looking like very likely I am not going to get, well, I shouldn't say very likely, but it's looking less likely now that my positioning in Robinhood will get called away from me because the $75 strike price is now, what is that? That's, a good move higher. That's a 7% move higher in order to get called away from the shares. So I do have plans on Monday to manage this trade that I'm in Robinhood. So I love the stock. I want to stay in it long term, but I sold or shorted calls. And so with this announcement not working out for Robinhood, and now kind of dropping hard, I think what I'll do on Monday is with just a couple days left on the call options that I shorted here, I do plan on rolling those calls. I think what I'm going to do is I was talking to a friend who also owns the stock. We were thinking about looking at, or for me, I was looking at rolling my call options out to $90 per share. So I may take this and kind of move it up to 90, shorting calls higher up in price. So, Robinhood is a monster of a stock here recently. The stock looks amazing. It's, however, in my view, looking a little bit stretched to the upside. And with this announcement, we may get a little bit of downside or a little bit of a pullback in the next coming few days. So I do like Robinhood very much for the long term. I think this is a stock that has a ton of potential to continue to grow. If we take a look at HOOD and just take a look at some of the momentum here, you can see stock is just a beast right now. And so I am looking for this one to actually add shares in the event that we get a pullback. So if we got to move back down to like 55 or 60, somewhere in that range, this would be one that I'm actually looking to buy more share in compared to some of the others on this list, which I'm more in a hold position. At current levels, I would call this a hold. If we were to get a pullback into the 60 to 50s range, I would call that a buy, something that I'd like to add more shares to on my positioning. So currently the way I'm managing this is I think it is a bit stretched. I've shorted some calls and plan to continue doing that as long as we do remain stretched. So that's your kind of update on that one. Let's keep going. By the way, if you're enjoying the video, hit the thumbs up button, subscribe. Also, if you'd like to join our free Telegram channel, there's a link in the description down below. Let's talk about Nvidia. This is a big position in my portfolio as well. It has gotten much bigger here with the recent rally that we've got. My average share price on this one is $111.31. I've traded in and out of Nvidia several times as well. Done pretty well in this stock over the years. And I do think that this one, I made a video about it recently. I think this is headed higher. I wouldn't be surprised if in the next year or two we do see shares of Nvidia make a move towards $200 per share. We are sitting just shy of the all-time trading high. Take a look at the weekly chart here for just a second. What we can see is that we are back towards those highs, and I do think that this is a level that wants to get broken. The demand for chips is massive, and so if I'm looking at this one, this is another stock where absolutely love the stock, love the potential for this thing to keep moving, but price has gotten a little bit stretched to the upside. So for me personally, going to wait for pullbacks, but I'm probably also not going to add. So I think Nvidia kind of just stays as a hold for me at current levels. So probably just going to hold on to it. If it comes down, I probably won't add to it because it is already a good size position in my portfolio. But if we get some breakouts, if we start running real hot, I may look to short some calls against this position and just manage it from there. Let's keep going. We'll take a look at Meta. This is one of my favorite stocks as well. Obviously, a big winner here recently. And just keeps running. This stock is looking amazing. And as we near those all-time highs, I have thought about writing calls on this one. The problem is I only have 60 shares. This is a very high-priced stock in terms of the stock ticker value, almost $700 per share, which is amazing, which is incredible, just considering we were just at low 500s, now up back to 700. So this is stock for me, another one that I'm just willing to hold. We are sitting in overbought territory, so I would not necessarily be looking to add shares to this. Be looking for pullbacks on this one, but I wouldn't mind getting up to 100 shares if we got some downside, but I'd be patient on this one just because I have a very full portfolio currently. So potential buy if we got a pullback, but hold for now. American Express and Airbnb, these ones are both interesting. So let's do Airbnb first. Stock that I think is very much, actually, let's pull up some financials on Airbnb. So if I go Airbnb, this is a stock that I've owned for a while. I've done really well with this stock, trading options and just holding on to the stock. However, recently, this one's not a particular one that I'm looking to add. In fact, this might actually be on the sell category for me. If we get some further upside, I may take some profits on this position. As we'll talk about Delta, I feel the same way. These travel stocks were really good trades for me in the recent sell-off when the world kind of was afraid of a recession. Delta Airlines, Airbnb got absolutely trashed, and they were, in my view, good trades to kind of trade the contrarian perspective. We can take a quick look before we get into this. Let's just take a look at our, where is that? I want to go sentiment. I want to look at put to call ratio. Put to call ratio, people are still kind of nervous out there about the markets. You can see an elevated put to call ratio just tells you that there's more puts being traded than calls versus or relative to calls, and this kind of goes back and forth. When people are more euphoric or feeling good, they buy more calls, and when the market sentiment in general is more negative, they buy more puts. So market right now hovering just shy of kind of more in that fear level. We could also take a look at the AAII Investor Sentiment Survey. Investors are still pretty scared out there, still very bearish. So I don't mind the idea of potentially holding on to Airbnb for a little bit longer. But if we go back to our financials, yeah, I mean, we've not had super impressive revenue growth. You can see we've had some falling revenue, some falling net income as well. Price to earnings ratio has gotten pretty high in this one, up in the 30s. Forward PE looking like 31. Yeah, it's not a perfect picture for me right here with Airbnb. So I do like the idea of trading in and out of stocks like Airbnb and Delta, but where we currently sit, don't particularly love the stock, and with this thing pumping higher, I probably will take this as an opportunity to potentially sell my shares, get out of it, and kind of look for another trade another day. But I bought this one down in the April sell-off. We can pull up my positioning here on my portfolio. Yep, so you can see my share price on this one is around $121. So I bought it on the I don't remember exactly when I bought it, but I bought some shares. I have 218 shares of Airbnb, probably looking to use this one as a sell if it keeps moving higher, just to take some profits on this recent move. Let's also, while we're on this topic, take a look at Delta. This is another trade that I have done pretty well on. I've shorted calls on this one. I actually just rolled this on Friday. So I rolled my calls out to July of, or the 11th of July. So basically just giving myself a cap on this at $55. So if we, break through 55, I will be out of the shares and take a profit there. Got paid a premium, nice premium there to short those calls or sell those calls to someone else on the market. So my new getting called away level would be 55. So if this stock rallies in the coming weeks, yeah, that's going to be my signal to take profits and be out of the trade. So I would call this one a potential sell for me as well. When we pull up the financials, which again, I don't particularly love for something like Delta, you can see here, not the most impressive revenue growth, not the most impressive net income, and you can also see the PE ratio is an interesting one because Delta Airlines and we can also take a look at like American Airlines. You can see they don't have super high PE ratios, but you can see that their profit margins are so narrow, and any sort of hiccup in the economy really threatens, the profitability of these businesses. You can see we're talking about profit margins of 1.7%. Very narrow, 5.4%, and those margins have actually contracted. You can see our red line there giving us that indication. So I'm a little bit cautious when it comes to the travel stocks, and I do think that those are places where I would like to take some profits in the coming weeks. Amazon is a kind of always on the watch list for me. To pick up on dips. Still holding on to this share. I think this has room to continue higher. So like that stock, not really willing to do anything. Apple is a sell for me for sure. Not a company that I'm really super impressed with at this time. I made a video about this recently. I've shorted calls against my existing Apple position. I have 180 shares of Apple. I have calls written against 100 shares, so one contract shorted. So I am looking to get out of Apple. What did I do? I did 210. So if we get, let's put our 210 out there. So 210 is where basically I would get called away. So you can see that's pretty close to at the money currently. I shorted that a couple days back. So looking to get out, take some profits on Apple if we do continue higher on that one. Uber is a stock I really like. This one is definitely a buy on weakness for me, although we're not getting weakness currently. If we get into the Uber side of things, by the way, if you'd like to pull up stock financials like the way I'm doing it, the tool that I'm using is called the not the Edge Finder, it's the Stock Box. It's our other product. We have two main products. Edge Finder is more for Forex futures and commodities, and then the Stock Box is for stocks. So you can find information about it down below in the description if you're interested in checking that out. So taking a look at the income statement here, Uber still looks really good. We've had rising revenues overall and falling PE ratio. Free cash flow still looks pretty good. So I like this stock quite a bit. We take a look at Uber in terms of a momentum perspective. This stock has had a little bit of a pullback here. So if we get some weakness in the coming days, I may actually look to take some of the profits that I take from other stocks here and put them into Uber. So I think Uber, to me, looks really good. It's a stock that I want to own more shares in. Going back to what I was just looking at in terms of my positioning, you can see I have 200 shares of Uber. I'm not looking to sell calls in this one. I'm just looking to add to the name if we get some pullbacks. So I'm watching Uber going into this week for any weakness. Fortinet is another cybersecurity company that I like. This is another one that I'm happy to continue holding. This is probably just a hold for me at this time. Let's take a look at Intuitive Surgical. This is a bit of a speculative name simply based on its valuations. If I pull up, let's see if we have Intuitive Surgical in here. I think we do. ISRG. Yep, we do. So Intuitive Surgical, while they have really good rising, net income and revenue, and I love this company, we are talking about a PE ratio that's very high, 75, and forward PE of 71.5 or 71.5. Those are high valuations. That being said, the product that this company makes is pretty incredible. Robotic surgeries is something that I think is a powerful, futuristic kind of investment. But that's why it's valued very highly. So I do like the stock. I think momentum looks great for the stock. Stock price looks amazing. Probably just a hold for me. I got this on the sell-off in April. And I think that's probably the only time I would have been able to get this. The valuation was still high when I bought it, full transparency. But I liked it better than where it currently sits, and I liked it better than where it was over, in the high 600s. I think this stock is probably eventually headed to $1,000 per share. It's a pretty incredible story, and I like it quite a bit for the long term. PayPal, this is another easy one for me. Just to, I like this one from multiple facets. I like that it is in my view, it's a stock that kind of makes sense. It was a darling at one point of Wall Street. I have heat map screenshots from years and years ago where PayPal on FinViz was a big component of the S&P 500. It is, or not a big, but a much bigger. It's recently really fallen off. You can see we've had, for this company, pretty consistent revenue growth, net income growth. The valuation has come down tremendously on this stock compared to where it was years ago. Free cash flows dried up a little bit here, but I still think that this company is just a growth, a steady grower. It's not necessarily a massive, surprising stock. It's kind of a boring stock in a way. Even though this was kind of a highly speculative name years ago, you can see this stock used to be a $300 stock. This is a stock that I own share in. I think, it's kind of an easy one to keep in the portfolio. I've traded in and out of it several times and done pretty well with it. So I do plan on continuing to hold, and I do think that it has room to at least become back a triple-digit stock eventually. So I like it quite a bit. I'll keep it in the portfolio. Taking a look at HD, this is Home Depot. Home Depot is a pretty easy stock for me. However, the valuation is not easy to stomach. So if I just pull up HD... this is kind of another boring business. It does have pretty growing, pretty steadily growing revenue. They're doing some cool stuff on the AI. I actually have some friends that work at Home Depot. But the PE ratio, it's a 23, 20, $26 PE ratio stock. So in the mid to high 20s, forward PE 23.8. So probably just a hold for me. I do think that, the rebound in the housing market someday, I think that that's eventually going to happen, especially if rates come down. So I like the idea of keeping some exposure to a Home Depot in my portfolio for that potential exposure in the future. So I like Home Depot. I think it's a kind of a stable, standard S&P 500 stock to keep in the portfolio. Google is a big one. So this one's I made a video about Google here recently. Google is... there's people who love this stock, there's people who really hate this stock. The idea being that, if you get AI continuing to grow at such a pace and all these people are using chat systems instead of Google search, that really cannibalizes into the business. Even if Gemini is part of the picture, they're losing the pie. I still think Google has such a list of amazing products: YouTube, the Google Suite, Google Search, Gemini. It has such a diverse business portfolio, and I actually like to see people kind of getting scared about Google because it brings the PE ratio down. If we take a look at Google, for example, in our system, I want to show you something here. So what I like about Google is that you can see that it has nice, steady, rising revenues, rising net income, and the PE ratio has really fallen off on this one as people have kind of lost their love for Google, if you will. They have nice free cash flow, forward PE of 19. I mean, this is a stock that people are very scared of Google for the search stuff, but I think that Google has been, over the years, very innovative and very creative in their approach, and they buy businesses that do really well. So they have that free cash flow where they can buy competitors. So it's a stock I like, and for me personally, I would be buying this one on weakness. So I'm looking for a pullback into the 160s as a possible area to actually add some shares to the portfolio. Let's take a look. Where else do we have? I did a Lulu short put. I'll talk about that in a second. CRM, this is kind of another software name in the portfolio. So if I take a look at Salesforce, really just a hold for me at this time. I like this company, but again, kind of a challenging one in terms of a valuation perspective. I take a look at Salesforce. It's not a cheap stock. Even with the decline in PE ratio here recently, you're still looking at a 41 PE. So forward PE is 24. I think that's kind of promising in terms of they are expecting to have pretty good revenue growth and income growth. You can see they've been rising over time pretty well. So I'll keep it in the portfolio for now. And then what was I saying? Oh yeah, Lulu. So the big sell-off, right? I actually I took this trade inside of our Discord group, which, by the way, the link is in the description. I shorted a put on Lulu, ticker symbol LULU, Lululemon. I shorted a put on this one. They had their earnings announcement where they beat on the top and bottom line. So let's see. Do we have Lulu? I believe we do. Let's pull it up. Yep, Lulu. So this one, they actually had pretty good beat in terms of their profit margins, in terms of their net income, revenue. The thing that people didn't like is that the same store sales actually declined. And so that was a little bit concerning. Like per location, their profitability slightly declined or didn't decline. I think it was just less growth than expected. So it is it's a stock that's not valued super cheap, around 25 PE, forward PE at 18. I mean, this to me, I like the stock. I think it actually has some potential. So what I did by shorting a put here is essentially I collected a premium. Let me actually see if I can pull that up. So here's the trade that I did on Lulu inside of our VIP Discord, which, by the way, you can see all the stocks and options trades that I'm taking. If you want to get real-time updates, click the link in the description down below to sign up. So Lulu, they had, I sold the 250 puts out to July 11th. I collected on this one $625 for shorting that put or selling that put to someone. And so I feel pretty good about this this trade. And essentially what this is saying is that I think that Lulu will probably rebound from here. I don't see it, dropping precipitously from here. And if it does, what I'll do is essentially I'll get assigned the shares. So I'm not afraid of assignment here. I will get assigned 100 shares at $250 per share. So it is, it's a 25K investment if if the share price is at or below $250 per share. So it is a good sized position, but I'd establish an initial position of Lululemon at that price level and would be happy to hold the shares. So I'm looking at this one. I'm saying I think likely that was an overreaction to the downside and that we're going to get a bounce, in which case I'll just keep that $625 that I collected in premium. But if we go lower, then I'll take that as well. I'll take the $625 in premium and get assigned the shares. So I'm comfortable either direction. If the market rallies or if Lululemon bounces back, I'll just keep my $625. And if this goes lower, I'll keep the $625 and have to buy the shares according to my put contract. So we'll keep an eye on that one, but that is another position for me that I'm watching. By the way, like I said, if you're enjoying the video, hit the thumbs up button, subscribe, and if you'd like some more information about the Stock Box, which is the tool that I use to scan stocks, and or if you'd like to join our Discord, there's information in the description down below. Thanks for watching.